Good turnaround Tuesday, everybody. How's everyone doing? Alexander, Simon, Jorge, Bran. Everyone doing all right?
Good early morning, Dale. Good morning, everybody.
And there's a team jumping in, the best team on the net. So here we are. I think there's more upside left in Euro. What are you thinking here, Kman?
To be honest, I'm not touching it before perhaps even Thursday, because I want to wait for the inflation data, and then I was going to wait for the midterms as well, but it could be days or a week or whatever before we know the results. But the results are how shall I say, pretty baked into what the market would look like in case the Republicans take back whether it be only the House or both. I guess that's what we are going to see, what we have seen over the past day or two.
Yeah, they say the House is baked in. The Senate's the only thing that's kind of uncertain.
Yeah, exactly. But does it give Biden more leeway if he keeps a very limited, like, let's say another one vote majority in the Senate? I'm not sure, right?
Yeah, not much. Not so, lame duck is a high possibility.
Lame duck is the word. So I guess that's what we are seeing. But then it's so that. That makes the inflation data likely the most important bit to watch for the direction of the dollar in the immediate future. Yeah, there is a case for the dollar to go a little bit lower. I think that's exactly what we are seeing now. But I don't know what's going to happen on Thursday. So I'm very, very limited in whatever I have.
Yeah.
I'm rather trading crosses than anything else. I did have a little dabble in the dollar China because of the COVID situation, but I've already reduced the position. I mean, a bit of euro sterling. I mean, my core left euro mix, and I'm really waiting for the combination on Thursday, U.S. inflation and Bank of Mexico to see whether I can press back on the pedal to either sell Euromex or Dollarmex or both.
Yeah, that's been a nice trade for everyone that's listened.
It's been a really nice trade.
Yeah,
it's been a nice trade. So now I reduced my Euromex to the bare minimum, and I'm really waiting.
It's really ugly, but it is starting to diverge. I understand there could be a rally any day.
We're trading back on the, what is it, May, March? Where the low? May or March, I think.
I'd have to go to a weekly.
It is 30th of May, so May lows. That's where the big level now lies. And if we break that, and ideally, if we need to break it, it would have to happen on Thursday. If we break that, there's room to the downside.
Don't we have an inflation number Friday too? Do we have two inflation numbers this week?
Do you have two inflation numbers?
Or it's Thursday.
Hang on. Let me quickly run through the calendar.
You got the Michigan. Wait, Friday we do have University of Michigan.
And then on Thursday the big one.
Okay. All right.
And then
late new.
Yeah, Bank of Mexico then, and that may be the clincher to break through in 1940 in Dollarmex.
Anyone surprised that the precious metals haven't followed through on Friday yet? I mean, they've done nothing wrong. I think they will follow through, but what they waiting for?
Yeah, I mean, as we were already mentioning, the 21.15, 21.5 big level on silver, 16, 80, 90 big level on gold. Perhaps just waiting for the good catalyst to get through.
Yeah. Okay. And there's no island bottom in TLT anymore. So. Yeah.
But I heard yesterday a lot had to do with a flood of new corporate bond issuances. So
corporate. You know what's unusual to me is, and I asked Joseph Wang about it, is how the junk bond, these are treasuries, proxies for treasuries you're looking at now. So, I mean, that looks like it's on the verge of another low, right? But then you look at junk, okay, and that's what it's called. Okay, I'm not, criticizing the paper, but it's junk, and junk acts
Still doing
better
well.
than sovereign. And even corporate
Still doing well.
looks a little better than sovereign. So people still want yield, but I guess the supply side there. One positive on TLT is if it makes new lows, because it never did, and actually that's what bothers me about the dollar, and that there I think there is going to be another rally to new highs. But here, TLT, see this RSI at the bottom? That's a terrible reading.
Yeah.
So you usually don't bottom on an 18 RSI. You have to build, reduce the momentum with new lows. And the same thing is right there in the Dixie. I mean, Dixie peaked on, look at this RSI at the highs. So is this really a top, and it's just giving people forever, and this is a big distribution top? Or, are we just going to play with this level maybe a little bit and then blow to new highs? Because next time I don't think we will confirm. But, and I've been looking for a top in the dollar forever, but all these tops so far have been corrective. So I don't know where.
I'm still not one for for a weaker dollar, but
Yeah, me either right now. Because
sorry?
me either right now. In fact, I'd be looking maybe for a short up here in the euro at 102.
I'm still of the, but I don't know now with the midterms and the combination with the inflation data coming up. Not too sure, but all else equal, I will say I'm still, as you say, the dollar dips are still looking very corrective, right?
So copper came off yesterday, had a negative day because of the China news, right? But
yeah,
it hardly gave up any. This was 8% this day, so it gave up
trade
3.
on the back of China. When they will reopen, it's probably going to go to 5. But before that, we could be hanging around this. What is it? 3.25, 3.75 for quite a while.
Yeah, platinum. Again, the white stuff goes first.
Yeah,
it's pretty input. Looks like a pretty nice breakout here in platinum. I actually think platinum's going to gain on gold. You could be long platinum, short gold, because in my career, I remember platinum trading at a premium for decades. So, right now we're trading what, at a $700 discount to gold. Anyway, platinum looks good.
That's one of Stel's specialities, right?
Platinum?
I think so.
I wouldn't call it speciality, but it's one of the things I am looking at. Yeah.
Voilà.
Yeah. Platinum, palladium, silver, the white stuff.
The white stuff. Yeah.
Yeah.
Another white stuff, which is not legal. I'm kidding.
God, I hadn't thought about that in a while. Okay.
I have a question for Stel.
Huh?
Stelios, if we get a full Republican swing, House and Senate, don't you think that's going to be a hamper on silver's advance, because the stimulus or the whatever projects are going to be blocked?
Yes, but also I think it's going to be dollar negative. So I'm not sure. I'm really not sure.
It's interesting you say that, and I'm sorry to interrupt, but Kirk Spano, I put forth the thesis that the dollar, everyone thinks the dollar does worse under Democrats than Republicans, but during an interview with Kirk, he actually showed charts that actually say the opposite, that the dollar suffers more under Republican administrations. So we'll see. Is that why you think the dollar will head lower?
I just think that it's going to be a a problem if the both the House and the Senate are controlled by Republicans.
For whom?
Because for the government.
Yeah,
right?
but that is a good thing.
That's the way the market may look at it, huh, Steve?
I don't
No,
know.
I mean, think about it, and I'm not joking at the moment. I'm not, I know that I often joke about things, but
You're
I'm
not
going to be
being
dead.
jaded and cynical, Steve?
Yeah, I'm gonna be dead serious about it.
You can be sincere and compassionate.
I think that both. No, you don't worry. You're not in danger of the ladder. So think about it, right? For many years now, both parties legislate in a horrible way in whatever has to do with economic policy, right?
Mhm.
So in essence, inability to do much is a positive, in my opinion. Because instead of deregulation, what we usually get is more regulation, more intervention in the markets, and worse economic policies. So the inability to more or less legislate because the White House has no support from the House or the Senate is probably overall a positive for, citizens at least.
Okay, some good news for American is
and I would say the same. I would say the same in the
paralyzed government is.
I would say the same in the opposite direction as well. I mean, I would say the exact same thing if, Republicans had the White House and Democrats had both the Senate and the House of Representatives.
Yeah, well, fiscally, there's been no fiscal discipline by either party, right?
Yeah.
Yeah.
Think about it, Dale. The vast majority of the bills that pass, the overwhelming majority are spending bills.
Exactly.
Right. So the less they can do. Yeah. So the less they can legislate, the better it is for the economy.
Okay. All right. So we'll see what happens. I'll just be happy if people accept the results. Okay. Whatever
that's a very valid comment.
No matter what the outcomes are, instead of us getting to the point where no one's going to believe in them again.
Well, that's not going to happen, Dale. It's not going to happen.
What? That no one believes in them?
No, it's just there's been the seeds have been sown too much, and that's not going to happen. So what I'm more fearful of is that some Republicans will lose, and then there will be election deniers. The fortunate thing is, I know a lot of Democrats that are actually voting Republican. So there's the flip side to that, So it's going to be really interesting to watch. And I don't worry about states like the state that I live in. I worry about states where you live in, Dale.
Yeah.
And I don't worry about those of us that have guns. I can walk to I can walk to any neighbor and knock on their door, and they can they'll pull out a revolver and stick it in my face. In California, that's not so much the case.
Yeah.
So guns are a little bit more restricted in places like yours and other states. So when everybody's not armed, then it becomes a problem. With this type of rhetoric. So
although the premise itself is very troubling, right? I mean, the premise itself is very troubling. I mean, getting to the point that
that
having a gun is a necessary evil to feel safer is already a failure itself, right?
It is. I believe me. I don't like it as much as anybody else. The problem is it's so heated, and then I do worry, like you, Dale. I worry, a lot. Like I said, I don't worry so much about where I'm at, but I worry about like other parts of the United States. It's scary,
Yeah.
So
I worry about radical people and radical government.
What's that?
Radical people and radical government.
Yeah.
As far as
I mean, it's it's on both sides. I mean, I was watching something about, this is really interesting. It has nothing to do with the markets, but I really do want to talk about the markets here in a second. But I was watching, I forget what it was, like a 60 Minutes or something, where all the social media platforms, they really push the, you know, it's kind of like the sex sells, you know, the violence and rhetoric, and, you know, heated rhetoric gets the most likes and retweets, and it's sad but true. And the sad part is only 7% of, you know, society is really on the far right or far left, and, you know, the rest of us happen to be somewhere in the middle, but we get hit with all this, you know, nasty rhetoric, whether it's, you know, doesn't matter what side, you're just getting hit from both sides, which it's sad that these social media companies are really leveraging it. And that's why, you know, for me, I try not to tweet anything political. You guys, you know, might have an idea of how I vote, but you really don't know, because I'm not going to talk about it. You know what I mean? So I'm not going to tweet about it because it doesn't really matter in the markets. It matters, the market reaction matters to elections, but I try to stay away from that, because these social media companies, whether you're talking about Facebook, you're talking about Twitter, you're talking about Instagram, TikTok, they really, really want you to be heated, because that it's like the whole sex sells thing. Well, you know, you know, violent rhetoric sells too. You know what I mean?
Exactly.
And so don't feed into the machine, people. You know, just stay away from it.
And anything that stimulates, you know, the most basic instincts, right, of humans.
The worst of them.
Yeah. I mean, as you said, Blake, we need to go back in the markets, but I'm going to tell you something, like, will take 20 seconds, right? Yesterday, for the first time in my life, I made a Facebook account, not because I want to have a Facebook account.
Yes, he's on Facebook. Woo!
Yeah,
I'm gonna go friend you.
I'm against it, but I bought myself I bought myself and my son an Oculus VR, and it requires you to have a Facebook account, right? Yeah. So I go in Facebook for the first time and just put my name and, you know, my date of birth, etc. So Facebook has nothing on me. They don't know anything about me, right? No connections, no nothing. So I log in and I get a huge list of suggested friends, none of which I knew, right? Because Facebook didn't know anything about me to actually start making connections. All of them were women of an age group that might be interested to my age. All of them. Not a single suggested friend that wasn't a woman that somebody at my age would be interested in.
So they got it right. Good.
Yeah.
So what you said before, right?
So how did you like them?
I didn't. I didn't. When I was just astonished.
You should sue them. It assumed that you're heterosexual. Anyway, let's go to the markets. Come on.
Yeah. All right.
I like that formation you got there, Blake.
Yeah, well, you know, so I've been looking at this ascending channel, and then now it's like developing in a bit of a triangle. Now, I shorted some sterling yesterday because of the same triangle. You can see this the consolidation pattern developing, right? Nice. So you got that, and then the Aussie. You know, we have an inverted head and shoulder pattern, but we're also, you know, trading at triangle resistance. You know, Kiwi's kind of doing its own Kiwi thing. The dollar CAD is sitting on a head and shoulder support. So you can see all of these, you know, really critical levels that we're at. And I don't know if, well, it's going to take something to push us above that. And if you're looking at dollar weakness, like, you know, let's go back to the euro. And I know, Dale, you were just saying, hey, I'm looking at, maybe I should sell some euro up here while we're up at parity.
No,
I know
102.
102. Well, sure, 102 is
That's
channel
where
resistance,
but
look at the triangle setups everywhere in the FX market. Now, the reason why I bring this up is because if, you know, you're going to take the dollar index and the dollar, let's say the dollar is going to break down, and this is our support zone. You can see last night it held, and this support zone, just go back to ForexAnalytix. I'm going to just so you guys have all, you know, seen this. It's been there for days and days and days, wherever my dollar index chart is at. Let me find it really fast. Oh, here it is. You know, we've had the support zone here for days, right? Going through there. Yeah. You can see it, you know, right?
Yeah.
So last night we actually pivoted off of the top of that, which is just resistance from, you know, back here. It's just a zone, right? In order for us to get down below there, for the dollar to actually break down. We're going to have to see some risk on. So, well, then you have to go, well, what is going to attribute to risk on over the course of the next 24 hours? It would be the midterm elections, right? So, you know, tonight, election results are going to come in all throughout the evening. I mean, they're going to, and if you're in Europe, it's going to be, you know, you're probably going to be fast asleep. So be careful if you have any dollar exposure. I'm telling you this right now. As I told the people in the ForexAnalytix chat room this morning, you know, if you're here, I'll just go ahead and read this to you so you can kind of get a clue of what we talk about here. I said, with the midterms tonight, unless I get a good price on something, I'm going to be pretty flat. I am long Aussie New Zealand, is updated in the trades room, which, by the way, the trades room's right here. If you want to, you know, see how the trades room is. And if you're in ForexAnalytix in the chat rooms, it's just open multiple tabs so you can monitor like the trades room at once, along with the, you know, ForexAnalytix room. Anyway, and as I go on to say, I don't mind owning a cross rate or two, meaning, you know, a non-dollar cross like the euro sterling, or maybe, you know, maybe the pound yen or something. My dollar exposure is going to be very limited tonight. And I'm telling you guys that right now, because there will be volatility. I mean, the algos are going to be, and Paulie made a good point of this yesterday with the algorithms. They're going to be, you know, moving the markets based on silly, you know, state results. And, you know, like the state of Arizona, the state I'm in is a very key state for both the Senate and the House, and or for Congress, excuse me. And it's going to move the markets a little bit, but, you know, a little bit with low liquidity could be a 30 pip in your face. You know, I'm short the Aussie or long the Aussie, and next thing you know, you get this thing, you know, whipping around in your face. And so, you know, I think the wise decision is just removing your exposure or keeping it very light, and moving your stops to a place where you understand where your risk is, or just standing aside. And that's what I'm going to be doing. I'm going to be standing aside. What are your best ideas going into the elections? Because I'm going to just share with you guys. This trade is the Aussie Kiwi. It was a trade that I talked about last Wednesday on the trade-off on the Pepperstone show. If you go out 5 years, you can see this trend line. This is a retest of the trend line, 161% extension of the last move. And golden fibs, I'll trade them almost every time. It's a counter trend, revert to the mean type of trade. You know, when you get this like oversold relative strength and you're sitting on a golden fib, you know, I'll take it, you know, to the long side and, you know, target back up here somewhere. That's like my best trade right now, because I know I just exhausted all my dollar shorts into last week. I was short the dollar, you know, playing Aussie long and the dollar mex short and all that and all that other stuff. And I don't mind reestablishing those, but I'm going to wait until after tomorrow. But what do you guys think is going to be your best trade right now? Let's go over to Ryan. Ryan, what are you thinking?
I don't know, I'm looking at guns for the next time I have to vote in this country.
Yeah, well, in your country, do you want me to ship you a few?
Yeah,
I'll ship them in parts. I'll just pull them apart. I'll send you like the lower receiver, you know, on one parcel, and
send me a bit each month.
Do you think that works? Okay, so what are you gonna do?
Yeah, I'm setting up potential for a break in the Aussie dollar, US dollar, for the break of
that. You like this setup?
That 65, 20, 40 zone. We're hovering just below it.
Yeah,
I think we're going to have a crack at it. So
you can look at it either way. And let me pull up a chart that might be a little bit more, maybe less drawn on. Let's do this. Okay. So if you got and you know, I'm sure Steve would want to jump in here and talk about technicals really quick. You have an Aussie that looks like this. Now it's a pennant, right? Pennants tend to be bearish continuations. You know, if you talk to Grega, that you know, if we break down, that would be probably an ending diagonal or something like that, or I forget what terms he would use. I'm looking at it as a reversal too, more for the macro backdrop and what's happening. But why aren't you looking to short that? Why are you looking to be long? And again, I'm looking to be long as well.
Yeah, well, because I'm already long. I'm playing the wider US dollar.
Oh, you're
thing.
playing your bias.
Yeah.
You're letting your position shape your bias. I get it. Okay, go ahead.
Quality of the quality of the. Go ahead.
Although theoretically speaking, his bias led him into a position into that, and not the opposite.
All right, continue on, Ryan.
Yeah, because I mean, you look at it since what, April last year, or April this year, it's been one-way traffic down, and now it's stopped going down. So that's your first signal that we may not be going down anymore in the near term. But as you know, I've had a short dollar bias in other pairs as well. But the Aussie dollar, it keeps, you know, we've got that series of higher lows coming in. We keep banging our head. You know, too many knocks on the door. We likely to have a little crack through that 65 handle at least. Whether it can get through 65, 40, probably 50, it needs to clear. Is the main part. But I also like your Kay was showing it, and Stel, and on the flow show, the Aussie Kiwi. You know, that's looking at a pretty solid level down there.
Yeah, you know, I like it too. I think the Kiwi has been really outperforming so well. But here, I want to leave you with this, and here's my biggest issue with this. And believe me, I want to be long the Aussie dollar, probably more than, you know, as much as anybody else. One of the issues I have is relative strength was divergent on this way down, and you can see it like. Actually, it wasn't. Now that I'm actually focusing on it, that wasn't actually a divergent relative strength. But you can see how relative strength is moderated. Now we're back to break even, or about the midpoint. So it can like loosen back up and head lower. And that's, I think, the biggest risk right now with the Aussie is if we get some risk off. Like, let's say, you know, S&P start, you know, bolting back down towards 3,600. The Aussie is going to follow, unfortunately. And maybe it'll be its last move lower before it moves up. But anyway, that's what I'm thinking with that. Kman, what are your thoughts? Best idea going into tonight?
If we already get results tonight,
yeah.
No, as I said to Dale, I want to wait for the dollar should weaken a little bit because that's what's been happening into the midterms, and if we get the confirmation, we may see a bit of follow through. But then I think on Thursday, inflation can either accelerate the whole thing or reverse the whole thing. But I'm keeping a very close eye on that dollar mix. What else? Dollar yen is starting to make me a little nervous. That could weaken more if we get through 145.60, low 145. So we have to be a bit careful with that, because the highs have been lower in the past sessions. So yeah, maybe yeah, the dollar yen might be one to keep a close eye on.
You know, it's okay.
I asked Kman for one idea, and he gives us 42 ideas. That's you're getting more than you bargained for here.
I have an idea.
Free-face webinar. What?
You know what? I don't have any guns. I don't go to vote in a country where it's dangerous to go to vote. So I'm
scary, right?
Other ideas.
You know,
how the world is sad. Looking at us now.
I'm actually gonna go vote today, and I'm you know, for those of you that don't know, I'm a veteran. I'm a combat veteran. I'm gonna go to a polling station. If there's a jackass with a gun at the polling station, I'm gonna tell him to go home, and I'm going to verbally say it really loud.
Boy, I'd love to be with you, man.
I cannot. I'm actually pretty excited about it. So, tell him, like, you jackass, go home. I mean, seriously, that's what I'm gonna say today. All right, Steve, what's your best idea today?
I wrote the chart of the day yesterday.
Oh,
for me,
yeah, you did.
For me, the thing that is at the most important juncture at the moment is gold.
Okay.
So I think what happens from here to gold is probably going to be important for several markets, right? And pretty sure a lot of eyeballs, you know, are watching the same thing at the moment.
Okay, sounds good. I think gold, you got a couple of major trend lines coming into view. That 618 really important. Stelios, what are you thinking?
Dollar MEX, if we break 41.
What? Wait, hold on. Did you say you're trading dollar MEX?
Yep. I rarely traded, but I like the setup. If we trade, if we break 1941, I'm selling it with the stop above. And I think we do break that, we're getting to the mid 18s pretty quickly. But I think this is the kind of setup where if it does break, you'll get down to 1915, 1920 pretty quickly, so you can adjust stops and do whatever you like after that. So I'm waiting for a breakdown.
Stelios is a copycat.
No, look, I and just so you guys know, I actually bought dollar MEX yesterday. I bought it because I know where my risk is, but I definitely would love to play it on the short side. I
think there is no denying that the Mexican peso has been one of the strongest currencies.
It has been, and I've been building the case, and
for a year.
Kman's been echoing it this whole year, like be long the peso. It's just right now, it's obviously this is more of a tactical area to be on the long side, but
plus you get the carry. It's beautiful.
Oh, it's a huge carry. I think I've made a lot of money on the carry just every night, just holding it long. It's great. Anyway, guys, great ideas. Did I miss somebody? Dale, what's your best idea? I did. Dale, what's your best idea?
Move down to Mexico.
You're moving down. You're going to move to Mexico.
We almost did so a few days ago.
That's a great trade. That is a great trade.
Blake, a few days ago, we were just 10 miles off the border, right?
We were. We were in Tombstone, Arizona, and we were just in Tombstone, Arizona, and Steve was like, "Let's go to Mexico." That'd have been great because you guys didn't have passports. I could take you over and not get you back. That'd have been interesting.
I think we got the most epic picture in Tombstone, didn't we?
Oh yeah.
Let me see. I think we have that somewhere. Let me see if I can. No, this is a pretty good one, though.
No, it is amazing.
This is a good one for you and your family. There you go. That was good, but we do have the good old 1880s photo. That was pretty awesome. But anyway, well, guys, I want to say thank you all and good luck today. Just remember, no matter where you live here in the U.S., go vote. Make your voice heard, and it's important. No matter how you feel, it's important for your voice to be heard. And for the rest of you, good luck today, because it's gonna with the midterms, it's gonna be a little volatile. Just watch your volatility here. Make sure you guys check out the trader funding program if you want to learn how to trade our money and be involved. Then that gets you access into the ForexAnalytix community for a period of time, and you can come chat with us and talk about the trades, go in the Flowonomics room, talk about macroeconomic topics. And get all your news and research from where people upload all their best articles that they've seen overnight, whether it's Bloomberg, Reuters, whatever, news, headlines, everything else. Anyway, come chat, come see us there through the Trader Funding Program. Dale, have a great interview today. I love Miyadi. I think he's great. So you guys enjoy the interview, and I'll see you guys tomorrow.
Thanks, Blake. And ForexAnalytix will support you during your assessment period. And so do our guests. Miyad, welcome back. Hello, Miyad. Welcome back to F.A.C.E.
He's still muted.
Still?
Yes. Now he's unmuted.
Hello, Miyad.
Good afternoon.
Great to have you back, buddy.
Thank you. How are you doing?
Okay, so I want to acknowledge last time you were with us, I forgot where the euro was trading, but you were looking for 95. Nice work, nice call. Where's your head at now? And do you want to share your screen and show us what you're thinking? It's that little green share.
Appreciate it. Yeah, I'll share my screen in a second. Just want to quickly say hi to Dale, Ryan, Blake, and Stelios Leaf there. Good to see you all again.
Hey, Miyad.
Good to see you. Glad to have you here.
Okay. Thank you. Right, let me share my screen.
Here we go.
Right. heading right with the Euro USD.
Yeah.
I think that's the
Okay.
asset everybody likes to look at to start the
Yeah.
day.
Yeah. So, I mean,
For me, what's been,
right to your target, Miad. When were you on with me last? About 4 months ago?
sounds about right. I believe it was what, maybe August, even a bit earlier, maybe July, thereabouts.
Yeah, so Euro was trading above par or right
Yeah,
at it
yeah,
anyway. So
yeah.
that was a great, at least 500 pip call for new lows. And so I'm interested. Do you think this is just a bear market rally that we're going to get? Are you looking to lay into it maybe up around 102?
I like to give both reasons why you want to be long and short Euro USD. I think in the short term you'd rather stay still short, or maybe look for ways of find dips where you can exit your short positions. I don't think in the short term Euro USD is going to do a lot of favors for bulls. The way I analyze when I look at that pair, I mostly take into consideration the yield convergence, and but the one I like to look at is actually the rates, the short end specifically. So this is a synthetic chart that shows you the difference between the German bond yield on the 1 year and the US bond 1 year as well. And if I were to overlay this with Euro USD, it gives you a pretty decent path to why Euro USD was heading lower most of this year, and also why it's kind of balancing out, because yields are sort of balancing out. I think after what we heard from the FOMC last time, where they told us the yields horizon is uncapped, it can go as high as it needs to go, that leaves us a little bit for interpretation. So we have to go by data to see if the US yields will eventually peak. With Europe, it's a bit different. They're a bit behind with the hikes, and also inflation is still double digit or thereabouts in Europe, which basically helps for yields in Germany to push up against the US ones. But that move will only happen once US yields peak out. There's one way of looking at it, and there's another way of looking at it by looking at the federal funds rate futures. I like to look at the one from next year, so December 2023. And for everybody who doesn't know what that chart is, it's very a simplified way of how market is hedging against what interest rates will be in the United States by December 2023. So as long as this chart keeps plummeting, I don't really want to call it top in dollar. And there's other dynamics in play as well, which is right now pushing the dollar higher. But once I see that this shows signs of strength and sort of bottoming out, I think there's a good reason to believe Euro USD to move higher. So in terms of level, this time it's a bit more difficult. 96 seems to be reasonable to hit for the rest of the year. But big picture, I believe the biggest move for Euro USD will be to the upside, not downside, in the coming 5 to 6, possibly 8 months, as we are potentially, if Euro picks up fire and yields keep pushing up, I can see 116 achievable.
Okay, so that's a switch. Do you think there's a chance for one more retest of the low based upon that last chart that you showed? Maybe take it out and shake out people that think that the Euro's bottom and have them doubt it with one more decline?
Yeah, 100%. I don't think Euro has found the bottom. Mind you, there is still time left for the rest of the year to really see the dollar strength. So I don't think now is the time to buy Euro. But I'm conscious that the bigger move for Euro naturally should be to the upside
next year.
Next year, there will be the
All
potential. Here right now, we are more in a choppy zone. So yeah, you can see some downside. It will be quite grueling to trade it, in my opinion, but there's definitely some more downside. While we're on the subject on Euro, I really quick wanted to touch on Euro GBP as well. I think there's better opportunities if you are bullish Euro. I can definitely see a scenario where we see 90 getting printed this year again. If I were to show you the same thing, so yield divergence on the short end with the UK, the Bank of England kind of gave us the hope that yields aren't going that high anymore. Where the ECB is doing the opposite. They say they don't know how it's going to go yet. So that certainly gives us some more upside in Euro GBP as well. Again, 0.90 seems to be reasonable for this year, potentially higher as well. And so I feel like if you're bullish Euro GBP is the smarter choice. With Euro USD, there's a lot of balancing act.
Okay, great. Yeah, you know, you have more conviction and you look for the opportunity. Don't marry an instrument, marry good risk reward, right?
Exactly. Good habits and to good results and better profits as well.
Okay. Any view on so you're mainly following any other clues that you're getting, for example, with rates on the commodity currencies, Aussie, Canada, Kiwi? Where's your head on those?
Against the dollar, I feel Aussie hasn't bottomed out.
Okay.
I think these lows for sure, they are still aggressively can get attacked. We've heard the news of China taking the COVID policy away. It's never going to be like, oh, we're going to stop it. It's all hunky-dory. It's going to be a transition period. China is a huge economy, Dale. By the time it turns around, it's going to take a good few months.
It's
in
like
my
a huge
opinion,
battleship. It's a battleship.
Yeah, it has to
not
turn
a speedboat.
Yeah, it's not like that. You're right. And for that, for Aussie to kind of find the positive environment back from China, you're probably waiting somewhere around March to see a decent rally in Aussie dollar. That's how I see it. So I think the zero policy is coming off. China is certainly going to help its economy, as to some extent commodity currency like New Zealand and Australian dollar. I think it's a bit premature. I think we're going to have a bit more chop. There's going to be occasional rallies, but I don't think there's going to be that oomph and that interest from other investors to start getting in there. You see some bottom fishing, but I don't think that's the end either. I think Ryan alluded to that. There's potentially we're going to have another dip as well, and I'm really much on board with that. That makes a lot of sense to me to see another dip.
Ryan's bullish right now, I believe, against
Is he,
this
Ryan?
resistance. Yeah, thinks we're going to pop out of this resistance. But that would say that the dollar has a little bit more weakness before it maybe reasserts itself. You follow anything happening in the gold or silver market? Is it noise or is it real? We're approaching some pretty important resistance levels in both. You have a
Glad
view?
you mentioned that. So my chart we're looking at is US real yields and the candlestick, and gold is an orange, but it's inverted.
Yeah.
So you can see gold generally tends to follow the flows of where real yields are headed. In my opinion, as the economy starts slowing down, grinding to a halt, usually, and that's for my research, 3 to 6 months before all of that happens, gold finds a bottom. I don't think buying gold is a bad idea. I think if you buy gold at these levels, anywhere from now to another 12 months, you certainly will see some profit. And to a great degree, I believe you're going to see some profits. Whether now is a great time, this is the bottom, or whether we're going to see, let me actually show you that chart, whether we're going to see another dip or so, it's always a little bit difficult to say at these junctures. I tend to make my living out of being involved in the meat of the move, not necessarily at the bottoms or tops, because they're a bit more difficult to predict.
You're going to live longer. You live in Scotland, Miad, which, I remember talking to Martin Armstrong, who talks about, a lot of, Armageddon type stuff, famine, war cycles, everything. And I said, well, Martin, where can you go in the world to ride out the storm? And Scotland was one of the places, and New Zealand.
For sure.
And
I'll keep you hot free.
Huh?
I keep you hot if you want to come over.
All right.
A little bunker.
All right. Anyway, you must have a book of, how a man from Iran ends up in Scotland is, quite amazing, I would think. So, anything else you want to cover here, Miad? I mean, I kind of have the gist of, you're looking for maybe $1 top early next year, and you really favor the euro. So it's just a matter of picking your spots on that and be patient with Aussie.
I feel the most actionable trade here.
EG is euro pound. Yeah.
I feel like that's a better trade. I was long here, then Rishi became PM, and I knew there's going to be some long covering. I had to get out, and I'm looking to reestablish a long possibly today, or if not, I wait for the CPI data coming this week. And talking of CPI data, there's another news coming out in the United States. There will be the midterm elections.
Yes.
I believe it's more or less established, I think, where we had it. It's unlikely that Democrats hold the House and the Senate. So there's going to be some disparity.
Yes,
that tends to, funny enough, that tends to help the U.S. economy because they can't rack up as much as debt as they like. People like to see that. So I think that's going to be another factor possibly helping USD for the rest of the year. But we know more by the end of the week.
Okay, and you know, that spike we had in Euro Pound, that was on the collapse of the gilt market. So you would think that we could at least fill in that wick that lasted for about, I don't know, 30 seconds. The high up there,
was
93.
A total collapse. Yeah, it was a total collapse. Happened overnight. I can tell you're old school. You see wicks, you're attacking them. You're right. When I see wicks in the market, larger wicks like that, I like to think there's certainly room for that to do. And more often than not, you're right. And if you look in any other, even FX market, when you see these larger wicks, it's never, ever, almost never, ever the top or the bottom. It always gets revisited. So certainly I like to explore some of that. Whether we're going to see the whole lot of it or not is still debatable. So while you mentioned it, I want to show you another one which got revisited just most recently. It's not your go-to currency, but it's USD Turkish lira. So we had this massive wick here on the back of the central bank intervening. And look at that. Easy fill.
All the way.
All the way.
All the way. Great example. From a veteran. It takes someone who's seen a few cycles to know that. And has been putting in his screen time to become good. You know, that's what it is. You can't learn experience. You have to put in your screen time, everybody.
You have to take a few rounds on that carousel.
Yeah. Anyway, Miad, best way for people to follow you, stay in touch with you, and really great interview. We were able to cover a lot of ground and just get right to it. And I love how you just can boil it all down to a few sentences so that people get it. Best way for you want to show your website, buddy?
Of course, yeah. Why not, Dale? So I've got a website as well. Speculators Trading, been running for over 5 years. Where you get to see sort of monthly videos, what's happening in the economy, what's important. We also have some exclusive London Fix videos, which is a specific strategy to do around the London Fix that happens every day. Also do reviews on the trends and which ones we're trading. If you're a bit unsure if the pricing isn't really for you, you can always try maybe a monthly membership and see if really trading is for you. Some of you might just be still in demo trading, you're not too sure. So you can test the waters, see if there is something that you like to engage with. I know a lot of you are working as well, so trading isn't a full-time thing. So I run the course around that. So the material and the actionable setups, they're going to be in a way that you can take advantage of that as well. If you're new to trading as well, or if you're limited for time, there's always a weekend read, and throughout the days, the information you will get is going to be more timely rather than just filling your screen with everything. So if you're interested in that, I'd like to join you there.
I have one question from Paul. He's curious to understand why you think the euro will stand up against the pound. Is that about the yield pictures that you see?
Good question. It's not only the yield. The bond market digests all the economical data and starts pricing things in, which makes mine and your job easier. But no, it's not only the bond. So bond is telling us that the energy crisis for the UK will be worse than Europe. The price cap for the energy rise in Germany is much more attractive for businesses that is in the UK. And apart from that, our current account valuation has been absolutely destroyed this year. And I say our because I live in the UK, and it's just getting worse. It's not really getting better. So that's a lot of the dynamics where if euro is bad, GBP right now is worse, and it's going to get worse against the euro.
Okay. All right. Well, I hope you and your family have a warm and safe winter, Miad. Thanks for joining us today, and thanks for sharing your ideas. Some things to focus on for a narrative going forward. Miad, thank everyone. People will appreciate it. They're going to contact you, and really appreciate you being here today, buddy.
Thank you, everybody. Thanks for having me, Dale. Thanks, Ryan, and Blake as well, and the whole community. Looking forward to speaking to all you soon, very soon. Thank you.
See you.
Cheers. Bye.
Adios.